U.S. consumer, that has been the strength of the U.S. economy. Capital spending has been mediocre. Exports, of course, have slowed. So where the U.S. consumer goes from here is going to be a big deal. So the top 20% of income earners spend 40% of all consumer spending. So if they're going to get impacted by the lack of a SALT deduction, they're going to spend less because they feel like the value of their house is going down. If you live in the tri-state area, you live in California, you live in Illinois, that's going to have a pronounced impact on consumer spending. I think the market's betting on you got to get a trade deal. China's stimulating. That will then help to boost Europe. And if Europe improves, then we can improve. But I promise you, if that's the case, interest rates won't be where they are today. They'll be much higher. If the bond market is right by the second half of the year, I can promise that the stock market will not be at these levels.
So do you think folks in D.C. have underestimated the negative impacts of the SALT cap deduction, as I have been railing and tweeting and raising that issue almost endlessly, because I think it's going to have a more negative impact, especially in the second quarter, as people are writing those checks to the IRS than was first thought?
100%. This is a law that's been in place, for 100 years, and all of a sudden they essentially ended it. And I don't think that they really had an idea of what the impact was going to be.
Something like 1862, President Lincoln included the deduction of state and local in the first income tax bill ever passed in the country. And by the way, for my Republican friends, it was a states' rights issue. That's why
but it's also it's double taxation.
It's always been insisted on.
You're taxing the same dollar of income twice by not allowing you to deduct your state income taxes. So there is a legitimate argument against it just from that perspective. But I'm talking to friends. I live in New Jersey. I see what's going on with real estate prices. I see and I'm hearing the extra taxes that people are shocked by that they're ended up paying. And it's going. I keep saying that. I can't wait to hear what Home Depot has to say about business in New York, New Jersey, Connecticut, California, Illinois, Massachusetts. Because if you think the value of your house is going down, you are not renovating your bathroom.
Money to fix it up.
Exactly.
Scott, let me just tell you what we think we know about this, which you need to put like an asterisk that covers the fact itself. It's such a big asterisk. We put tables out, the Joint Tax Committee, that showed 10% of folks in the top quintile would get a tax increase. 90% get a tax cut. So we want to be a little careful about anecdote not being evidence here, right? We won't know what really happened until sometime in September when we get these tables. At the same time, you have a self-selection here where the people who get whacked the hardest talk the loudest, okay? But I will say, I talked to a gentleman from the Tax Foundation.
Population centers.
Big population centers with a megaphone, right?
Sure.
So I did talk to somebody at the Tax Foundation this morning, Kyle Pomerleau, and he said he's rethinking a little bit his initial sense of it being benign, not because of the SALT by itself, but because people also get hit with a change in the child tax credit, which basically, I could go through this for a long time, but it goes from $4,000 to $500, depending upon your situation. If your kid was 17, now it becomes 18, he's off, you don't get the credit at all. And he thinks the combination of those two things, Scott, could have a negative impact. And, I'm sorry, one more thing. None of these guys is able at all to model the psychological effect of the whack to your real estate.